Welcome to TriTech University. My name is Bill Steppen, and today we are going to take a look at the general ledger functions of AIM point of sale software. Good afternoon, Devin. How are you today? Hope you're doing well. Hope you had a good Canada Day, if I'm thinking correctly. And welcome to everyone else who might be joining in today and who has yet to log in. On that right-hand side of the screen, there is the chat function. So you should see a little option there where you can click the chat. And then down below, you can click where it says to log in either with your Facebook profile or your Twitter handle, if that's what you prefer. Or if you don't want to do either of those, or if you don't have either of those, you can just click the nickname button and then punch in your name, and you'll be able to participate in the chat back and forth between myself and everyone else who's attending today. So as you probably already picked up, today's focus is going to be getting started with just the whole idea of how general ledger works here in AIM, getting familiarized with how it works, the process of the setup, what you might already have, what you might need to set up, and we'll just hopefully get all of your questions answered so that you can get comfortable with using that function. This is by no means a deep dive into Accounting 101 or anything like that. I am nowhere near qualified to do anything of that sort. That'll be something that you'd be best working with your accountant. But if your accountant or bookkeeper do have any questions or concerns, especially about what AIM is or what it can do for them and for you, just know that it is a fully featured accounting program. It is GAAP compatible, generally accepted accounting principles. Not that there's a standard for that or anything like that, but it does comply with all the kind of the rules and regulations that you could think of when it comes to accrual-based accounting. So we're going to jump over into my test copy here of AIM, and we'll just kind of roll with this like we always do. So like I said, if there's anything that you have questions on, feel free to go ahead and plug that into that chat box. I will be keeping my eye on it over here. But when it comes down to the core of general ledger here in AIM, it all revolves around oops, that's the wrong button. It all revolves around the chart of accounts and the categories that coincide, or I guess you could say that interact with those accounts. So you can come in here into maintenance, ledger, and chart of accounts. Let me go ahead and see if I can't kind of continue what I was doing before, where I can try and finagle my Zoom to make this a little bit easier for everyone to see. So let's just kind of do this here. And see if I can zoom in on that. There we go. Okay, so AIM starts with a fully functioning chart of accounts to get you started. Every ledger account in here can essentially keep track of a balance. So all of these accounts are made up of a 3-digit ledger number and then a 1 or 2-digit sub number. You give it a description, you give it a grouping, which the grouping then determines what type and subtype it is. Again, for those of you who are a little bit more familiar with accounting terms, there are ledger accounts that handle all of your assets, your liabilities, your equities, your revenues, and your expenses. And that's just all going to be based on which grouping it's associated with. These are grouped in that order, that again, that kind of that generally accepted order with all the assets first. And those are going to be your 100s accounts and down. So you kind of see as I scroll through here, we've got all kinds of cash on hand and bank accounts that all coincide to assets and current assets. Then as we get further along, you're going to see that that grouping shifts to inventory, which are still assets and current assets. And then this is going to be associated with your inventory categories that you have within AIM. As we get beyond those accounts, you'll see that they get into investments and prepaid expenses. Then we get into a fixed asset grouping, and then so on and so forth, depreciation, valuations of land, and so forth. Then we get into other assets, and ultimately we get into the 200s, which is your liabilities. You can print this out right out of AIM at any time. If you'd like to review this, you can go to your reports and general ledger, where you can run a chart of accounts report. It's kind of just over here above my head. And when you run that report, and I'll just print this to the screen, it will tell you every account that is in your system. See if I can't kind of drag this around a little bit again, just to kind of get it on screen a bit more. But you can see that it will tell you the ledger account, and then the type and the subtype and the grouping. And the way that this kind of works is there are, of course, financial reports that go along with AIM so that you can run those at any time. There's balance sheets, there's income statements, there's trial balances, there's detailed trial balances. And the way that these get laid out on those reports, they're usually numerically ordered, but they're also grouped on those respective reports. So when it comes to your balance sheet, this is going to show all of your assets and your liabilities in accordance with, again, accepted principles. And they're going to be grouped by those groupings. So all of these accounts that you see here that say grouping cash on hand and bank, that will be one section on the balance sheet report, with its balance made up of all of the balances of these different ledger accounts. Then when you get beyond cash on hand and bank, there will be an accounts receivable section, which again will be within the type and subtype, assets and current assets. But then its balance will be made up above all of these 110 through 115 or so. If you need to add any accounts to that section, you just kind of want to make sure to be cognizant that they kind of fall in that lineup, that arrangement. So if you're going to add another accounts receivable account, you'll probably just want to make sure it's somewhere between 110-2 and 115-99. You can also obviously have 116 in there. In essence, you could have 99 sub-accounts for every one account. And not that there's a direct correlation between the two, it's just kind of a way to keep things organized. For example, you can see if we scroll back up here, you've got 108-1, which is checking account number 1, and 108-2, which is checking account number 2. It's not necessarily a hard, fast rule that your checking accounts have to be in the 108 range. It's just a nice way to keep them organized. So if you do have, let's say, a third or fourth or even fifth account that is a checking account that you'd like to keep track of, you just add it accordingly into 108-3, 4, 5. You would just come back in here, click the Add button, and then you would, for the ledger account, say 108, sub number 3, and call it checking account 3. Or it doesn't have to be named that specifically. It can be named whatever you want it to be. Maybe this is U.S. Bank, or whatever you want it to be called. Then you would, of course, give it that grouping of cash on hand and bank. That being said, you could come back in here and go to the checking account number 1 and rename it something that would be more applicable to something that you want to keep track of, like American Trust, or whatever the name of your bank is that you want to keep track of, if that's helpful. But my one major rule when it comes to working with this existing chart of accounts is, if at all possible, try not to delete any accounts. The reason I mention that is there are a wide variety of presets already in the system that are going to be looking for these specific accounts, and if the account is not there, it's suddenly going to have issues when it wants to try and post ledger activity to these accounts. Ledger activity being debits and credits. We'll get into more of that in just a few minutes. But that does kind of segue me into how AIM actually interfaces with the chart of accounts. So before I get to that, my last kind of hard rule, try not to remove any accounts, but by all means, feel free to add any accounts that you feel that you might need, especially expense accounts. There are a number of expense accounts here down in the 600 range, things like wages and utilities and taxes and various types of equipment expenses and things like that. So expenses are pretty straightforward. There's just a grouping called expenses, and those go into a type and subtype of expenses. So by all means, If you need to track some kind of expense that's not already on here, you can add it pretty much anywhere in the 600 range and just make sure that it gets into that grouping of expenses. If you do want to further customize the groupings themselves, you can do so in the maintenance and ledger area, where you can go to chart of account groupings. And in here, you can come in and let's say you wanted to add another expense type. You could click the add button here. For the subtype, you could call it expenses. If we just kind of get to that, there we go. And then whatever you want it to be called for a grouping. And then by associating it with that subtype of expenses, which it already knows is the expenses type, again, if you need to tweak those, you can do so here with types, the setup here. So this is where it knows that that expenses type, or subtype rather, is going to be the expenses type, which is always fun to say when you try and say it out loud. But that's kind of the idea of it. So again, if you want to tweak it, you certainly can. I would advise you just to give our support team a call if there's any questions at all about what you're doing with the chart of accounts. So like I was saying, this will segue into how AIM, the rest of AIM, interacts with your general ledger. Throughout the system are a number of what are called categories. So let me just kind of bring this back up to the top. In fact, let me do this. Let's kind of turn this mode off so that way you can kind of see these edits as I do them live. So if we go and take a look, for example, in your inventory categories, at the category level, you can see that every single one of these accounts or these categories is affiliated with essentially 3 ledger categories or ledger accounts. When I make a sale out of this guitars category, for example, it knows to take the cost value of that inventory, take it out of or essentially credit this 120-3, move it into or debit this 412-3, and then whatever the actual selling price of it is, it's going to record that to this 411-3. Now that is a very specific preset that we have within AIM. You'll notice if I click the add button here and it wants to add a next category, category 17, you'll see it's going to create by default general ledger accounts 120-17, 411-17, and 412-17, and then whatever I call it, widgets, for example, you'll watch what happens here in these sections here. When I go ahead and hit save, it's going to create 120-17 inventory widgets, and 411 and 412 for sales and cost of goods for widgets. So that's something that it will do automatically for you because this is a very specific set of categories and ledger accounts that these get lined up with. But you could think of categories as the bridge between ledger and everything else in AIM. When you record a sale out of this category, it knows to hit these 3 ledger accounts based on the cost and sales values. When we take a look at other categories, such as if we go back to ledger and take a look at non-inventory categories, all of these accounts, all of these categories also report to some kind of ledger account. In the case of any sales of service parts, whatever I sell against that category is going to make an adjustment to 521-1 service parts. If I make any sales of service labor, that will record to 520-1 service labor. So basically, the ledger is reactive to the rest of the settings within AIM, if you want to think of it that way. So ledger is always kind of following the activity of the rest of the system. The rest of the system is sometimes what we refer to as subsidiary, and then the rest of it is all ledger, or kind of however you want to think of it that way. So with that in mind, when it comes to the non-inventory categories, for example, you'll see if I click the add button here, there's really no function here for automatically generating a ledger account. That's because it's not necessarily a hard and fast rule that what you sell here needs to be recorded as revenue, that 400 or 500 range. For example, if we take a look at gift certificate sales, when you sell a gift certificate, you can't immediately record that as revenue. That's something that a customer is going to eventually want to redeem. And so therefore, this is going to be recorded by default to a liability ledger account, 209-20 gift certificates in this case. Same thing if you're using our electronic cards, our gift cards that are available within the system. When you make a sale of those, when the customer initially buys a gift card, that's going to get recorded to 209-15, the electronic cards ledger account. Only at the time that the customer actually redeems those gift certificates and those gift cards can then what they purchase be recorded as revenue. So again, we don't have a function for just automatically creating a ledger entry when you add a new non-inventory category. So just going to kind of keep that in mind. That being said, the same pattern holds true any place where you find a category structure. If I go back to Ledger and take a look at, say, for example, payment categories, when you record a payment at point of sale, it's not only going to keep track of what type of payment that was just based on the description that you give it, but it will also record that activity to a ledger account. And again, we have some presets in here for those various types of payment methods. 109-1 for cash, 109-2 for checking, various types of credit card pre-auths and authorizations. You'll notice that the gift certificate method here has a 109-6 for gift certificate clearing, which we'll do another live stream down the road for some other functions for like end of day and stuff like that. You can also check out the other videos that I've done as far as how all of these clear to their various other accounts at the end of the day or whenever you're going to actually record your deposits. So let me know if there's any questions on the whole concept of the ledger relation to the rest of the system, but it can be as simple as just thinking that every account within the chart of accounts is a bucket where revenue or essentially tangible funds can be tracked and stored. Now, if we follow the bouncing ball of accrual-based accounting, or any accounting really, ledger gets affected by debits and credits. Now, there's a specific rule of thumb for whether a debit or a credit, or how a debit or a credit impacts a certain ledger account, depending on whether it's an asset or a liability or a revenue, or what we call an income account, or an expense. I believe when I took financial accounting in college, what's that thing where it's a learning tool? Like my very educated mother just served us 9 pizzas back when Pluto was a planet. There's a whatever you want to call it, a learning tool. The sentence, after eating dinner, let's read the comics. And the beginning letter of all of those coincided with, after was A for assets, E was equities, and D was dividends. And then let's was liabilities, read was revenues, and comics was C for, this is why I'm not an accountant. But everything before the comma, after eating dinner, was debits, and everything after the comma was credits, as far as whether it increased the value of that ledger account. So thinking about assets, for example, since it's right there at the beginning, when you debit an asset account, that increases its value. When you credit an asset account, that decreases its value. Again, your bookkeeper should know all of these details. This is Accounting 101. Don't hold me liable if I say something wrong, because that's just basically how it goes, and I'm not a CPA. But that's the kind of the idea of it. So when it gets down to it, AIM already knows how to make these posts. But if you do need to put in any manual entries, say, for example, beginning balances, because when we talk about your checking account, for example, AIM doesn't know what the balance of your checking account is. You want that to coincide with the balance of your checking account so that you can just look at the system at a glance and know exactly how much is in your checking account at any given time. But in order to do anything like that, you're going to need to at least make an initial batch of what are called general journal entries. Now, when you make a general journal entry, it's going to ask for some basic details. What is the date that you want this to affect your ledger? What location and tax authority is this going to go and kind of coincide with or line up with, such as for the purposes of reporting? What source code do you want it to use? Now, source code is kind of something that's kind of, I believe, unique to AIM. We have a preset of source codes in here, such as BF for balance forward, CD for check disbursements. AIM, by design, uses these source codes as a way so that when you're looking at the ledger activity, you can more easily discern what kind of activity created that entry, such as anything IJ for inventory journal. If you see that, you know that something relating to your inventory made that entry. So if you're going to be doing some kind of manual entry, typically you're going to use GJ for general journal. If you're going to be making some kind of correcting entry that should coincide with our existing entries, our best rule of thumb is to use the same source code as you probably already see on the other entries that impact that. So you'll make whatever source code you want to use, whatever reference number you also want to use. This is a way of grouping multiple journal entries together. Typically, those are going to be using things like the purchase order numbers of receiving inventory, or the sales reference numbers for point of sale. You know, you got your sales invoice number. It uses that to group all the ledger activity together. You can see that it will say you can hit the F8 key to use the next invoice reference. So if that's just something that you want to use, you can do that. If we're talking about journal entries of beginning balances, you might just use, for example, the date of the original entry. So all of these top row entries are typically going to be the same across your multiple entries. And then when we get to the second line, this is where you go in and you put in which ledger account is going to be affected. Let's say, for example, I want to put in a beginning balance to my checking account. So I'm going to go ahead and select the checking account. I don't necessarily need a department. Really, departments are kind of an advanced function, and they would only be used on your income statement accounts. We'll get into that later on if we need to. But we're going to give it a description. Let's go ahead and call this beginning balance. And let's say I've got $5,000 in there. And again, knowing that debits are what increases the value of an asset account, we're going to put that into the debit field, and we're going to skip past credit. You'll see that that goes down to the table below, and then down at the very bottom you can see there's an entry here underneath essentially the debit column. There's nothing underneath here in the credit column. So right now my total of my entry is a debit heavy 5,000 in this value. Now if I try to save this, you're going to see it says you can't save an out of balance journal entry. Everything within ledger needs to be in balance. The debits need to equal the credits and vice versa. It's in what's known as net zero in accounting speak. So we need to have some kind of coinciding credit entry. Now that could be made up of more than one credit entry, but ultimately we need this field here to say 5,000 so that this here will say 0. Now, an easy way of doing that is to just put this against retained earnings. And then we'll just kind of keep everything else as is, the description and so forth. We're just going to come over here and put that into the credit. And you'll see that that now shows a $5,000 credit so that the total activity is that net zero that we're looking for. This is by no means financial and general ledger advice. You're going to want to check with your accountant as to where exactly these posts need to go. I'm just kind of demonstrating a typical general journal entry so that hopefully it makes sense. Let me know if you have any questions over to the side in the chat bar. But that is basically the whole idea of the general ledger system within AIM. So at its core, kind of in summary, you have the chart of accounts. Every ledger account here in the chart of accounts can keep track of a balance. those balances get impacted automatically when you go at just using AIM on a day-to-day basis based on sales to your categories, receiving inventory in those categories, making sales against non-inventory categories, taking payments with payment categories. There's a whole subset of what are called system categories, which are also in the system and referencing various types of ledger accounts. For example, sales tax. Whenever you make a sale that has sales tax involved, there is an 1801 system category that knows to look at these references here for reference 1, 211-1, which is the sales tax ledger account by default in AIM, so that when you make a sale, let's say you sell $1 of something and it's got a 7% sales tax on it, and you take $1.07 total in payment, it knows that it needs to record 7 cents of collected sales tax into this 211-1 because it knows to look at system category 1801 reference field 1. Again, these are things that you typically don't have to dive into to learn. They're just already there for you. But if there's ever any questions about why the ledger is getting impacted the way it is, these are typically going to be the first places you're going to look. So just kind of keep that in mind. So chart of accounts, all of the accounts can keep track of their own individual balances. Those balances get referenced and updated based on categories. And if you need to make any adjusting entries of your own, you can do so with the general journal entry portion of the ledger module. We're going to get into more advanced functions in future live streams. We've got a whole plethora of existing videos that get into the nitty-gritty of daily deposits, of bank reconciliations, of you name it, really. But I am excited to do these live streams because I love having that back and forth interaction, especially as more and more people get on board with this new program. I think it'll be hugely popular to have this live chat effect where everyone can kind of see each other and chat amongst not only yourselves, your fellow students per se, but myself here as well. So looking forward to the upcoming rest of the month. I don't have the schedule in front of me, unfortunately, but I believe that we're going to be doing some accounts payable live streams here in the rest of the month. I know it's very accounting heavy for the rest of July, and then getting into August, we're going to be doing a lot more with the long-term contract module. So I'm excited for that as well. If you need any pointers between then and now, or you are looking for some just help to get up and running with those, definitely check out the videos on those particular playlists in the video portal. So when you came here to get to the live stream area, specifically on the videos side of the equation, let me see if I can't pull that up here just to browse that for just a moment. So let's open up a web page here and just go over to that page. So while we're here too, we can look at the upcoming schedule. All right, let me bring this back over so you can see my screen. So on the video page, and let me see if I can't just make this a little bit, there we go, kind of fit it a little bit better. In the videos area, you can click here to, of course, go to any playlist you like. So say, for example, the General Ledger playlist, and then here's all the videos that I've done on, well, actually that's General Setup, excuse me. Let's go specifically to General Ledger. There's all the videos I've done in the past on General Ledger. By the way, people have been asking, where are all the live streams we've done in the past? You can come here to the recent live streams playlist, and there's the two that I did last month. This one will be here momentarily, so definitely check that out. Also, we now have the poll. The poll is live, so if you have any specific live stream topics you would like me to do, definitely come to the poll and add your idea here with the add new idea button. That will get posted here for everyone to see. People can upvote ideas that they really like, and they can even make little comments on that if that would be something that would be helpful. That would certainly help me out so that I have an idea of what it is that you'd like to see me cover in future live streams. I'm still trying to do my best not to say webinars. Not that that's a bad a bad term by any equation, but it's not the same format, obviously. So thank you so much to everyone who attended here. I'll just stick around for maybe a couple more minutes if there's any other questions on the whole idea of getting started with general ledger. I know it can be a really scary concept for some when we're talking about just hard numbers, but if we just break it down to exactly what it is, which is just numbers in accounts, and those accounts are simply buckets that can be affected with debits and credits, it's not as daunting in my opinion, and I believe in others' experiences as well. Thank you so much, Devin. I appreciate your feedback. And just to keep everyone up to speed on the upcoming webinars, not next week, but 2 weeks from now, we're actually going to be doing 2 webinars. So the accounts payable basics will be on Tuesday. That is a Tuesday, right? Tuesday, July. Actually, that looks like that is a Wednesday, isn't it? So it's a Wednesday, July 21st. And then the reconciliation webinar will be the following Tuesday after that, on Tuesday, July 27th. So 2 more webinars on accounting here this month. One's on the 21st on accounts payable, and then the next one after that will be on reconciling your purchase orders with those AP invoices. So definitely check those out. Thank you so much for all of your well, just paying attention, really. And we'll see you next time. Until then, I hope you have a great one, and we will stay in touch and take it easy.